One technology approach that can be utilized and probably is one of the most effective is just taking a look at all of the opportunities for recovery within your organization. So, for example, going back to our list of profit opportunities that are out there, there are quite a bit of categories such as audit fees, advertising, document freight, where if we could get the accounting coding for the expenses as they're being paid, what we can do is analyze that. And I primarily look at SG&A, the sales general and administrative, but I think there's still something to be said for looking at cost of goods sold and seeing whether or not vendor audits should be done for major manufacturing or material vendors or anyone. So I mean, again, taking a look at your cost of goods sold depending on your company type. Now, some of the data files that you'll take a look at are the general ledger, and that is useful, but a lot of times the general ledger doesn't have vendor information. So the general ledger will tell you that this much money was spent in this category. However, did we spend it as cash? Did we bring it over as an intercompany charge? What we're really looking for are vendors, and that's why the accounts payable invoice detail distribution, and what that normally is the invoice payment, and then that is broken out by what accounting registers that was associated with. So it could be account numbers throughout the expense category. It could even be an asset that you're purchasing. But again, the AP invoice detail distribution file gives you all of that info. Going a little bit deeper into purchase orders and pricing lists, I think that's a good idea, but I'm not sure if it's a good idea from the onset. I think to get that AP or general ledger distribution is usually your first best bet to figure out what categories do we want to be spending the most time on. With some simple summaries, you can find out quite a bit. I mean, you can look at general ledger accounts that are sole sourced, where one vendor represents all of the spend associated with that account. You could also look where an account has too many vendors, and that's where you may want to consider strategic sourcing it, centralizing the spend, and going out and doing a negotiation for that category. Obviously, going back to this recovery list of opportunities and mapping your data to it, it is also a very good idea in that it helps you to identify those categories that are very likely to be audited today, and there are auditors out there that can help you. You can take a look at some industry cost benchmarks. There are benchmarks by financial statement account type that are out there that you can find, many of which just through Amazon. But you can also get benchmarks from strategic sourcing firms, etc. So I also like to even look at just looking at who are the top 100 vendors of the company and doing an analysis of whether or not we've ever bid that category, when was the last time we bid it, etc. Just by vendor type, it can be a very useful exercise to take a look at, especially when you have those largest 100 vendors in front of you and you can add up what the implications are. We obviously want to time trend it. We want to trend it by vendor, and down below we have more specific tests that you could do, such as matching invoice payment pricing to PO pricing. But I still think, looking back up into the upper categories here, just doing this map to the recovery list and then taking a look where there's lots of vendors in certain account types and ones where there's just a few is probably one of the top things that you can do. Again, top 100 vendors, what I find interesting is most companies don't even know who their top 10 vendors are, let alone their top 100. So that report it always proves pretty useful. And I suggest when you complete your analysis to graph the data as best as you can. Here we're graphing risk and project impact, and then the numbers in there kind of showed how much money we may be spending on the project, internal time, and any sort of external costs. But when you start to graph things, you realize that there are some projects out there that are pretty low risk, pretty high impact, and won't cost that much from a dollar's point of view. So definitely something to consider in presenting the final analysis is to graph the information, and maybe using a bubble chart like this where you have three different categories that you're graphing on may be a very useful step in that process.